Hello, can you hear me? Hello,
Yes,
everyone.
sir. Yes, sir, you are audible.
I was in the dilemma that the session is at because I didn't know that they has changed for our session only. Anyways, what I will do, I will try to arrange an extra half an hour or something, maybe today or tomorrow, and we will sit down, right? Hello,
Okay,
can you
sir.
hear me properly?
Yes.
Yes, sir.
Because I just when I saw the mail from your end, I just rushed in without even cable. I mean, the hands-free cable. Fine. So we will finish the concepts and then we'll also do the accounting equation today. So can someone remind me where we were last time? Hello.
So we did the various concepts of accounting like going concern, cost concept, dual aspect. The last we did was the realization concept.
Okay. So the matching concept was left or matching concept we have covered?
So it was left, I guess.
It was
So
left,
it means
right?
left. Matching
Okay.
instancy and
So once
materiality
again, I'm
concept.
just I'm so sorry that you had to wait all this. I'm so sorry. Once again, I'm saying because the entire class was waiting and I wasn't around. Fine. Please inform the class that I'm in, and I will definitely recover this time we have lost today or tomorrow. Huh?
They have actually informed the class.
Hello.
They will be coming sometime. Yes, sir.
Can you be a bit louder because I'm not getting your voice clearly.
Sir, actually information has been passed to the class in the group, WhatsApp group. So they will be coming shortly.
Wonderful, wonderful. So great, so great. So guys, what is matching concept? Can you see the image? Can you see the PPT?
Yes, sir.
Okay, okay. So can someone participate? Can someone help me understand what is matching concept, please? Hello? Anyone, please? Or you can maybe raise your hand in the list, yes.
Sir, can I say?
Please, please.
Sir, the matching concept is that revenues and expenses must belong to a particular period. Like if they are paid in advance, then they should be recorded as prepaid, and if they are paid for the previous period, then they should be recorded as accrued.
Okay, okay. So, as of course, it is in line with the accrual concept that we have been discussing for some time now. Very good participation. Whenever I say matching, I'm talking about three things. I'm talking about the accounting period, I'm talking about the revenue, and I'm talking about the expenses. So, matching means what? Matching means you have a period in hand that is generally a year, let's say 2019-20. So matching means all the revenues that you have earned during 2019-20 and all the expenses you had during 19-20 has to be matched. So revenues and the expenses that you have incurred to earn the revenue are matched. That is matching concept, right? So let's say you look at any entity, you look at any balance sheet or income statement, right? What you would find is that uh, the performance of the business is captured through the matching concept. So all the expenses they had for the period are matched with the revenue of that period, and that gives them the profit, and then the profit is digested, the profit becomes the part of the balance sheet and it changes the position of the business. Fine, please say yes or no, please.
Yes, sir.
Yes, yes. Right now, another thing, and this I have been emphasizing upon for some time now, that there are two kinds of expenses. There is product cost, and then there is period cost, right? So what is product cost? For product cost is the cost of producing goods, right? So let's say if I have purchased, let's say 100 ACs during this year, and out of this 100 ACs, I have sold 80 ACs. So the cost of those 80 ACs is the product cost. So that is the cost I will consider for calculating the profit. So when I prepare the income statement for this year, let's say 2019-20, and I have sold, let's say, 80 ACs, I will look at the cost of 80 ACs, I will look at the income of 80 ACs, and that gives me profit. I hope everyone is following. Hello?
Yes, sir. Yes, sir.
Please start your camera so that I know whether you are getting this or not. Please start your camera. So sorry.
Yes, sir.
Yes.
Yes, sir.
Okay, and then there is period cost. The period. Okay, for example, someone has given the example in the chat box. I have to start the chat box just a second. Okay, if we do sales reversal at the end and due to sales cutoff, related expenses also to be reversed and finished goods shown as inventory. Fine, fine. That is what I'm saying. So let's say out of 100 ACs, 80 ACs are sold and 20 ACs are not sold. That is my asset because I'm going to sell this next year. So that fine, Prakash, fine. Right now it is fine. So there are two kinds of expenses: product cost and period cost. And period cost may not have anything to do with the product directly. So when I'm sitting in this classroom, the ACs are working, right? The light, electricity, and everything is working, whether the class is there or not. That cost has nothing to do with whether the number of students are sitting in the classroom or not. So if I'm a manufacturing unit, certain cost I am incurring, and that is important for my business, but that has nothing that has nothing to do with the goods I'm producing, goods I'm selling directly. But I cannot run my business without those expenses, right? I'll give you the example. Let's say because of COVID, now that is a very extreme situation. Let's say because of COVID, I am a very good company. Let me go to the extreme level. I am a very good company like Tata, and because of COVID, the employees could not come to the office for, let's say, 3 months, and I'm still paying salary to them, right? When I'm paying salary to them, their salary has nothing to do with the output that the company provides, right, Utkarsh? In that case, it is an expense, period cost, right? So that is matching concept. Everyone understood? Okay, fine. Okay, so this is also something I have discussed. So whenever you acquire goods or services, the money you incur is called expenditure, right? And that may be because I have paid cash to acquire them, or I may have purchased the goods or services or items on credit. That is by increasing the liability. Let's say Baumil is there, right? So and I have acquired certain goods or services, and that is expenditure for me, right? I may have paid Baumil, I may not have paid Baumil, right? When I acquired this asset, it is expenditure. And then so when I acquire, it is expenditure. And if the economic benefit is less than 1 year, if the economic benefit is less than 1 year, then it is expense. So the expenditure becomes expense when the economic benefit does not last more than 1 year. And when the economic benefit lasts more than 1 year, it is asset. Right? I hope everyone is following. Utkarsh, Prakash, are you following? Yes? Yes.
Sir, sorry
So
to
once again,
disturb you, but sorry to disturb you, but can you please unlock the meeting?
just a second.
Yes.
Just a second. Okay. Done.
Yes, sir.
Again, I will repeat myself. There is an example you can see with the blue colored ink, right? Insurance policy, right? Let's say this never happens in reality, Apurva, right? Insurance policy generally, general insurance is available for 1 year. Let's say I'm buying an insurance policy with the premium of 3 years. So the benefit is of 3 years, beta, when I'm acquiring. And let's say the 3 accounting periods are there: 1920, 2021, 21-22. So on 1/4/2019, there are 3 accounting periods. Remember, when I'm paying 90,000, it is expenditure, right? So on 1/4/19, it is asset, or you can say expenditure. And at the end of 2019-20, that is 31st March 2020, out of 90,000, 30,000 becomes expense. Because remember, we are following matching concepts. So 90,000 is the economic benefit for 3 years. Out of that, 1 year has lapsed, 1 year has expired. That means my economic benefit out of this 90,000 has reduced by 30,000 because the 1 year has passed. So what I have done, 90,000 of 3 years divided by 3. For each year, 30,000 is expense. So at the end of 2019-20, 30,000 is expense. At the end of 31st March 2021, again 30,000 is expense for that period, and the asset is 30,000, and so on. I hope everyone understood. Please stop me if you some of you did not get it. Please, everyone, please. Hello.
Sir, it's
Manas,
clear.
Utkarsh, Padma, I could not read your name. Padma Priya,
Yes, sir.
Yogesh, understood, beta?
Yes, sir, I understand.
Right. So look at the so when you are incurring something and when you acquire goods, services, or something, that is an expenditure, and then expenditure becomes asset when the economic benefit exceeds 1 year, and expenditure becomes expense when the economic benefit is less than 1 year, right? That's how it is. Okay, these are a few silly questions that you anyways know, so I'm not discussing this right now. The second most important concept is consistency concept or consistency principle, right? Can someone help me understand? Shreya or someone? Shreya, Utkarsh, Akshi, maybe anyone? Anyone, please? Because all of you got the textbook now, so you should start reading from the textbook, huh?
So if a firm changes their pattern of for example, marking depreciation without noting it correctly, then the entire forecast might change, or the entire predictions, or the entire profit margin might change. Hence, it needs to be consistent over time, whatever methods and practices you apply.
Right, wonderful, wonderful. See, what is accounting method or accounting consistency principle? Understand. In accounting, for recording certain transactions, companies and businesses have, they can choose the policy that is fit for their business, that is required for their business. So I'll take one example, right? Let us take the example of depreciation method. Now, companies can select straight line method, companies can select written down value method, companies can select maybe a machine hour method. So because they are using the asset, they have a choice to make. They can decide which policy is good for them. But companies cannot change the policy every year, because then it becomes very difficult. It becomes easier to manipulate the accounting information, and then it becomes very difficult to compare so I cannot compare the performance of 1920 with maybe 1819, because every year the policy is different. I hope you are getting what I'm saying, right? So this is also very powerful, but again, it gives the room to the business to adopt the policy. So accounting methods adopted by the business firm should be consistent with the use of that policy, right? They cannot change the policy unless it is required, because the business has changed, because it is necessary for that particular business, right? So the classical example is depreciation method. Another example I will take, let me take the example of inventory valuation method. In inventory valuation, see, Amazon is selling merchandise over their platform. So Amazon may be having inventory in their go down or warehouse, right? So to value the inventory, Amazon may have multiple methods, maybe using FIFO method, that is first in, first out, LIFO method, last in, first out, or maybe weighted average method. In India, LIFO method is not allowed for accounting purpose, right? So Amazon can select FIFO and weighted average, but Amazon cannot change the method every year, because Amazon has to be consistent with their approach, right? Can you hear me, guys? Because suddenly your cameras, all of your cameras went off. Hello?
Yes, sir.
Yes,
Right? Okay. Yes. I'm so sorry, but I have to. That's my job. I'm so sorry. And so I'm kind of like a
Yes, sir.
policeman as well nowadays. That I have to make sure that people follow rules. Right.
Sir,
So
FIFO, LIFO, and what was the third one, sir?
weighted average. Right. So it is like this, beta. When I'm valuing the inventory, because not all businesses are sophisticated and they have technology, right? So you cannot record the inventory at their value for each kind of inventory. Let's say I'm selling maybe variety or kind of goods where the price is always changing. Now, I don't know which inventory I have sold and at what price I had purchased them. So for simplicity, remember feasibility. One of the qualitative uh, concept is feasibility. Company should not incur money where they should not, ideally, because that does not really change the opinion of users of accounting information. In that case, I will not look at millions of products there in my inventory and look at their value and record at that value. That does not make sense. Nowadays, it has become easier because now we have computers and barcode and a lot of other stuff, but it is difficult. So FIFO means that we assume that what we received first is what we have sold first. First in, first out. FIFO. That is a full form. LIFO means last in, first out. India may not allowed. India may totally not allowed, right? In USA, it is allowed. And I will tell you why it makes sense. Imagine the industry of alcohol. In case of alcohol industry, LIFO makes more sense, isn't it? Because what is sold first? The cheaper one. The cheaper ones are the ones which came last. Because the older it is, the expensive it is, right? So, but in India, FIFO is allowed, weighted average is allowed, LIFO is not allowed for inventory valuation. And there are a lot of other methods, perpetual inventory and all that. I'll discuss in future sessions if it is a part of our syllabus, of course, right? So consistency, I'll take another example. I'm showing asset in my balance sheet. I cannot show asset at purchase price in the first year, in the second year at market value, third year market value, and fourth year purchase price, because the users cannot compare, right? Users cannot compare. Users will feel, oh, the investment in Japan has suddenly gone up to this level. Oh, the next year is also again went up. The investment that Infosys has in Japan. And the fourth year, oh, the value has gone down. You see, because investors don't know how it is recorded. Investors cannot ask for checking each of the accounting books. They believe companies and they go by the balance sheet values. Right? So again, companies have to be very consistent, right, with their approach. That is consistency concept. Last concept we have, that is materiality concept. According to materiality concept, and materiality concept is in line with full disclosure concept. So again, very powerful. All important information according.
Sir, before
Sorry?
that weighted average, can you explain?
Weighted average is what? Because it requires computations. I don't know how do I explain this over. Okay, let's say you have purchased 100. Manas, you have purchased 100 units of something at 10 rupees. Next day, you have purchased 200 units at 15 rupees. So in the outer, in the, what do you say, the inventory value column, you have 300 units of inventory beta 100 plus 200, but both are at different value, right? So both are at different value. So what you will do? You will do the average. So 100 into 10, 200 into 15, and then you do the weighted average. Why it is called weighted average? Because it depends upon the weight of the amount of inventory you have. So it is just an average, but with weights. That's it. That you may have studied in your schooling and all that. So it is very simple. Calculations are very easy. Don't worry, and we will discuss when the time comes. Right? Materiality concept. Full disclosure and materiality concept goes hand in hand. So what does it mean? Full disclosure concept says all important information should be disclosed to the users of accounting information. Once again, I'm saying all important information should be disclosed to the users of accounting information. Make sense? Why it should be? Please someone participate. Why?
If it's not disclosed in the material, information will be disregarded and ignored. Especially, for example, a lawsuit that's upcoming that can wreak havoc on the profit margin.
Right? Yes. So because so Sarthak, I want to discuss with you. How do you decide which information is important? That is very subjective, right?
If it affects the financial statements in any way, it should be disclosed.
More than that, of course, you are right. More than that, if it is affecting the decision-making process of the users, it is important. It may be very small.
Prevent anyone from investing or
it may be very small. For Apple, buying Beats is a very small business, understand, compared to the size of Apple. But that is relevant for Apple's users, right? So again, full disclosure concept and materiality concept are very subjective to the businesses, the kind of business activities they carry out, right? So what is materiality concept? Again, it is in line with full disclosure. All material information should be given. So all insignificant information may be disregarded. Now, I am not saying I'm not going to record it. I'm not saying that you don't record them. I'm just saying that you don't specify them separately. If I'm buying a stapler, Infosys is buying a stapler worth of 100 rupees. And the life of the stapler is, 100 years or not. I just, I don't know how 100 years came to my mind right now. I don't know. Maybe I just ran suddenly and my brain is all over the place. But anyways, let's say the life is 10 years, let's say, of the stapler, right? So does it make sense to record 100 rupees in the balance sheet of Infosys as a separate item, separate asset, saying that it is a long-term asset? Does not make sense, even because it is immaterial to the users for making decision. Oh, isne stapler liya, I should invest in this company. You see, or isne stapler nahi likha hai, that affects my decision. So that is subjective, I know, but it makes a lot of sense because for a business such as this, even if it is going to be used, stapler is going to be used on anything, maybe papers, printing papers, right? Maybe going to be used for 10 years. I don't need to write it as an asset. I can expense it in the same period when it is incurred because it is immaterial for the users. That information does not change the decision. That decision will not change my opinion about the company. Makes sense, right? Another example is telephone bill. Let's say every month I receive the bill on 10th. Every month I receive the bill on 10th. Okay, when I receive the bill on 10th, am I going to proportionately calculate the expense for 10 days and for 20 days? No, I don't need to do that. because more or less the amount would be very close: telephone bill, electricity bill, right? So the moment I receive the bill, I will write it as an expense for that period. So when I prepare my financial statements on 31st March, and if I record the March month expense, I would not do proportionate expense for 10 days and 20 days or 21 days, because then for 21 days I will have to wait for 2-3 more days or 10 days more, and the next month I will receive the bill, right? So it's okay. I know a lot of things are a bit complicated, but when we do a recording part that we may be starting today, you will get to understand better, right? So this is materiality concept. Another few images I have put, and don't take me to the court for using Tata's name. This image is a free for using. So I mean, what I'm saying is that not Tata is not in fact buying mobile phone. I'm just putting this as an information for easily understood, right? Now this, for this store, this mobile phone 10,000 is very material, but for Tata it is immaterial. You get my point? So for depends upon the business and organization, the items and the expenses on the assets become material and immaterial. When Tata is buying mobile phone, I'm not saying it is not important. I'm just saying that it is immaterial for decision making. But for store, of course, it is important, right? Because they have to record this as an asset, right? Similarly, a truck worth of 35 lakh is material for both, right? So this is what it is. Another important part. Let's say this is Tata's balance sheet, again a rough balance sheet, right? Do you see the value in the first table? 5469031.2.87. Do you see that? For a company such as Tata, do they need to show 87 cents? No, they can round it off. In fact, they can round it off to maybe a value in thousands, value in lakhs, maybe. So see, that's why you see when you see balance sheets and income statements in companies' books or annual reports, this is what you see you see it in millions, because those decimals those values after the million would not really matter to the decision maker who is investing in your business, right? So there is a logic to this. I'm not saying that they're ignoring all that. They are just rounding it off. And the actual record is recording this value only, 54,690,312.87. But for when you are reporting this to the outsiders, right, this value is immaterial. The decimals are immaterial. Makes sense, right? That's why companies do this, because of materiality concept. And sometimes you do not even know what logic. That's why these concepts are very powerful. So I think that's it. There are a lot of other things. This qualitative concept we do not have to cover, because that I have discussed already. If you want to read more, you can obviously, you have a textbook, but I am going to focus on this 11 plus accrual concept, 11 concept plus accrual concept. I think I have done my part for discussing all the accounting concepts. Now we have to discuss accounting equation. Now all of you have a textbook, so we can discuss that practical question from today's session. I think how much time we have? We have only 4 minutes. So guys, when would you be available in the evening? Can you tell me? When would you all be available?
So today we have an alumni talk at 2:15 to 3:30.
Okay.
But
And
we
then,
haven't received any notification, so that might get cancelled.
so when would you be available? That is what I'm asking all of you. When would you be available?
Sir, tomorrow we have 2 lectures only, so we can do it after that.
Okay, fine. So we will discuss that. I'm once again, I'm really sorry to everyone, and I will definitely cover this. I'm really sorry, because this is the first time in the history has happened. Trust me, and I'm not just saying because all of you are there. I'm just saying because I don't know, yeah. And they changed this timetable. They did not even inform me, and because I'm teaching 3 courses at a time right now, it just, I don't know. I just assumed that it must be according to the same plan. In fact, the other faculty who is teaching with me has the same time like they used to have. So there was no, I don't know, I just couldn't catch the time. Fine. I'm so sorry once again, I'm saying, because I really feel bad, and I will cover this for sure. So next class we are discussing accounting equation, maybe tomorrow. And please, all of you, tell me the time, convenient time, right? Right? You will mail me on your behalf. Someone will mail me.
You could potentially have a poll right here in the session. That way you can get an answer.
So poll about what? Extra time you want, or
potential, any, like just a couple of ranges on what times are convenient? Because I don't know how we'll contact you regarding.
okay,
Like,
because
you want
that
all
is
of us
again
texting of convenient
because timing is open, na, that's why timing is very open, that's why. Fine.
Sir, we have CRs, they'll communicate with you.
Sorry?
We have CR.
We have CRs.
Who is the CR?
Sir, me and Yogesh are the CRs.
Jitendra and sorry, who is there? Sorry,
Padmapriya.
and who else
Padmapriya
is there?
and Yogesh.
Okay, so would you come back to me, beta, please?
Yes, sir, we'll call you or message you or email
Please,
you.
please mail me because mail is more important. Because mail is something I always check. There is always a network issue with Vodafone in this institution, so I never, I'm not getting time to check messages because I never receive it on time. Fine, right? So yes, once again, I hope you understood the concepts and conventions. And trust me, this half an hour is not because anyways I was ahead in this session, so we are not going to lose so much in terms of comparing with section A. Right, so it's okay. I'm anyways ahead in this session. So, but I will recover this half an hour in the next next day tomorrow. Right. Thank you so much.
Thank you.
Any questions you have, please? Because we have 1 minute more minute. Sure, guys.
Yes, sir.
Okay, so please, I have update. I will upload the PPT also that I have used in the class. And a lot of students are mailing me. The PhD students are mailing me for guidelines. The guideline is not even uploaded yet because of certain things. We could not upload the guidelines of this first assignment. So we'll do it today or tomorrow, right? And definitely inform you as well. Thank you so much. Have a great day. Thank you so much. Right?
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.
If someone wants to stay back, they can stay back for discussing.
The book PDF available for the council.
Sorry, someone is saying, or someone is internally talking. I don't know.
No, sir. The PDF for the book of accounts where it is available. Is it available in the library?
This book ka PDF would never be available, and in fact, I cannot even talk about sharing the PDF version on this online platform because that is illegal. So, and anyways, this book are not available, right? But I have already shared. I think the accounting websites that one can refer in case accounting websites or YouTube channels one can refer in case they want to learn more. And then there is another. And I have a lot of ebooks, but I cannot share with you. I'm so sorry. Over this virtual platform, I cannot share with you. You can find your on your own. I can give you the names. So if you want names, please mail me. I'll reply back. Or I can please CR mail me. I will reply back with some answer. Right? That is fine. That is possible. But
So
I
when
cannot
you
share the book with you even if I have it. Right?
Sir, actually, we have got the name of the book in the course outline, but it is not available in the PDF.
No, Narayan Swami has been. You have received, right? So I mean, you may not, you will never get it in PDF format, beta, because how would they make business, beta? How would this that is PH India will make business, beta? So that is never going to be available for very good international books because the book is very much preferred. For some books, the ebooks would be available. For Indian, most of the time, it is never
They
available.
haven't sent us, I guess. They haven't sent us that book yet.
No, they have said yesterday. Some students told me also they have received the book.
So I haven't received it. I guess they are sending one by one, or maybe some.
No. Okay, do one thing. Okay. How many of you have received? Or how many of you have not received? Rather, that is the right
So I
question.
haven't received.
I haven't received.
Also haven't
Sir, I
received,
haven't.
sir.
Sir, I haven't received.
Sir, I also.
Sir, no one has received.
Maybe in the process of sending it, please also check your spam box in case it has gone to the spam box. How to register and download the book. Please check that once and do one thing. Do inform this to the office, and also maybe in case you want to share your names, you can share with me as well, right? But do not write a copy to me when you are sending it to the office. You send the separate mails to me, right? In case, because I can also talk to the PHI guy in case I have to. Right? So you can please inform office and also inform me, but in a separate mail. In a separate mail. Okay?
So one thing, sir.
We have not received it.
Yes,
Sir,
yes.
when will you upload the PPT on Moodle?
Today, see, I was going to upload that on Moodle because of certain issues. This 3 days were difficult for us to operate Moodle and everything. I will upload that on Moodle or this. What do you
Okay,
say?
sir. Means by
And
the
I will
end of
send
the
the
day
link.
you will upload it on.
I will share the link. I will share the link. Don't worry. I will share the link.
Okay, thank you very much, sir.
And the same accounting page I gave you, there are 2 pages, FRA and FAR. FRA is for FBE program. So there I have uploaded yesterday. So you can always go there and check. The same PPT would be uploaded for you, right? So in case you cannot wait for long, right? Okay. Thank you
Okay,
so much.
thank you, sir.
Thank you. I will again share the mail with you today, maybe by evening or maybe in the afternoon. Whenever I get chance, I will do it, right? Thank you so much. Have a great day. Bye, guys. See you.
Bye.
Yes, sir.
Bye. Yes. Yes. I'm ending the meeting, huh?